What we are going to continue is basic cost concept. Or it is also known as a cost sheet. How we find out cost per unit or cost of one particular product manufactured in a company. So say in a factory there are three products manufactured, A, B and C. I want to find out cost per unit of A or total cost of 10,000 units of A. How I do it? First I add prime cost. How I will find out prime cost? Any cost, direct material, direct wages and direct expenses. Any cost which is directly related to that product. Say I have hired, I want to find out cost of product A. I have hired a labor who works on manufacturing of product A only. Then he is a direct wages. Sir, if he is working in A, B and C, then his wages is overhead. His wages will be added in factory cost. What will be added as far as prime cost is concerned? All the direct expenditure. All right. So direct material, raw material is only for product A. Then that raw material for product A only will be directly added. What are direct expenditures? They are not direct material, direct labor, but direct expenses only related to which product? Product A. Then they will be direct expenditures other than material and labor. What will it happen? Prime cost. Is it all? Now, only the direct cost is cost of the product A. The answer is no. We need to add other cost also to factory cost. I need to add which cost? Factory cost. But understand, factory is manufacturing only product A or A, B and C, all three. All three. So this factory cost are termed as what? Overhead. And say 3 lakh rupees is factory cost. And each product are equally using the factory A, B and C. What will be given to A? 1 lakh. What will be given to B? 1 lakh. What will be given to C? 1 lakh. This given is a layman's language. It should be termed as 1 lakh rupees overhead cost is absorbed by product A, absorbed by product B, absorbed by product C. Is it alright? So what we write down actually is factory overhead, but it is factory overhead absorbed. So whatever we write down over here will be cost of only product A. It is a total cost out of which something is absorbed by product A, so it is termed as factory overhead absorbed. What we term this as? Gross factory or work cost. Alright. Then we add opening WIP, we deduct closing WIP. Add opening WIP because now these are the products that we are going to manufacture. Minus closing WIP, these are the products which we are going to manufacture in next year. So let us deduct cost of this product in current year. So we deduct closing WIP, I get net factory cost or work cost. Is it alright? Now there are some expenditures which are not related to factory. Say it is not electricity bill of factory. They are not the laborers who are working on A, B and C. They are not related to factory. They are which cost? Administrative cost. But they are related to production. Administrative costs that are related to production, like quality check. research and development of a product might not be happening in factory, might be happening at some remote places, say in office. What you are doing, you are researching about your product, then it should be added to cost of production. Say one person is doing survey of this pencil, say product A is a pencil, that the size of the pencil should be say 10 centimeters or 12 centimeters. Will it be sold more if we keep pencil size at 10 centimeters? That is the research done by one person on pencil A. This research might not be done in factory, but it is related to production. It will be added to administration cost related to production. I will add it, and what I will be getting is cost of production. This is for unit sold or unit produced. They are for units produced. This will be the cost. All right. After cost of production, what we do? After cost of production, say we reached up till cost of production, they are of unit produced. What we do? Add opening stock of finished goods. Now we have not done this, but please try to understand. It can be easily understood. These are the unit produced. Say they are 10,000 units. And opening stock of finished goods is 1,000 units. We add opening stock. Then we have not given the name of this, right? We directly did a closing stock. But let us give name of this. These are cost of goods available for sale. How many units can you tell me? This answer is how many units? 11,000 units. What are 11,000 units? Manufactured plus opening. What are manufactured plus opening? These are the goods which you can sell. So it is cost of goods available for sale minus closing stock of finished goods. Say closing stock is 2,000 units. You deduct this, and what you give the name to? Cost of goods sold, or cost of 9,000 units, or cost of 9,000 units. You are adding cost of 10,000 units plus 1,000 units. Cost of goods available for sale minus closing stock is nothing but cost of goods which are actually sold. So I get answer of COGS. Then what I add? Administration, which is not related to production, accountant salary, electricity bill of office and not of factory. Electricity bill of factory will go over where? Factory overhead. All right. So it is administration and selling overhead. When you add it, you get cost of sales. All right. Anything which is in P&L account always comes over here. Just for the knowledge, in financial account, you cannot mix accountancy and costing. But still, anything which is in P&L account is normally indirect cost. All right. So it will be in administration and selling overhead. I will be getting cost of sales. I will be adding profit, my desired profit or actual profit. I will be getting answer of sales. All right. Now, if someone is telling me, sir, what is the cost of manufacturing one pen? Try to concentrate. What is cost of manufacturing one pen? I will tell him this. Cost of manufacturing one pen is this answer. What is this? Cost of production divided by 10,000 units is cost of manufacturing one pen. Yes. It is cost of manufacturing one pen. So, what is cost of one pen? You can do this. Cost of sales divided by units sold, that is 9,000, units. All right. We have done all the questions up till ICAI examinations question. We will be solving ICAI examination questions. And even this first question is excellent. C 1.8 was asked in May 2019 for 10 marks. I feel there is some mistake in drafting the question, but it is a very small mistake. We can deal with it. MS Ariba Private Limited has a normal production capacity of 36,000 units of toys per annum. The estimated cost of production are as under: direct material, direct labor, subject to minimum of rupees 48,000 per month. Please concentrate. It is the subject to minimum 48,000 per month. Factory overhead fixed 3,60,000, variable 10 per unit. Semi-variable 1,08,000 per annum up to 50% of capacity, and additional 46,800 for every 20% increase in capacity or part thereof. This is somewhat difficult portion. Administrative overhead is 5,18,400 per annum, which is fixed. Selling overhead are incurred at rupees 8 per unit. Each unit of raw material yields a scrap which is sold at a rate of 5 per unit. In year 2019, the factory worked at 50% capacity for first 3 months, but it was expected that it would work at 80% capacity for remaining 9 months. Alright. So, we will be dividing our answer into 3 months and 9 months. During the first 3 months, selling price per unit was 145. You are required prepare a cost sheet showing prime cost, work cost, cost of production and cost of sales. Calculate a selling price per unit for remaining 9 months to achieve total annual profit of 8,76,600. Alright, what is our 100% normal capacity? 36,000. At 100% capacity, what will be our per month capacity? 36,000 units divided by 12, that is 3,000 units. I will be preparing a cost sheet with 3 columns. First column, we will be doing first 3 months, then 9 months, and this will be 12 months, which is nothing but total. First 3 months, you are working at 50% capacity. So how much units you will be manufacturing and selling? If you are working at 50% capacity, how much units you will be manufacturing and selling? Per month, 100% capacity is 3,000. You are working at 50% capacity, that is 1,500 per month. And we are talking about 3 months. So how many units? 4,500 units. And we will be assuming we are manufacturing also 4,500 units and we are selling also 4,500 units. I am doing only for first 3 months first. Direct material 40 per unit. direct material 4,500 into 40. It is 4,500 into 40. 1,80,000. Because it is 40 per unit. Direct labor 30 per unit subject to minimum of 48,000 per month. Alright. So direct labor is how much per unit? 30. Alright. Now, what will be 1 month pay of labor? 1,500 into 30. Can you tell me what is the answer? 45,000. But you will not have to pay them 45,000. You will have to pay them 48,000. So what you have guaranteed to your workers? How you have hired workers? I tell you. We will pay you 30 per unit. But if your salary is 48,000 or less, we will give you 48,000 rupees. We will not give you less rupees. Say only 2 units were manufactured. What would be salary of labor? Only 2 units were manufactured. What would be salary of labor? 60. But still we will pay them how much? 48,000. So this is how your labor is hired. 30 per unit subject to minimum of 48,000 per month. Here the minimum amount is not guaranteed. So my answer will be 48,000 into 3. Why 48,000 into 3? We are talking about 3 months, which is 1,44,000. There are no direct expenditures we can total out with prime cost. This will be my prime cost. Yes, there is scrap value of material, right? I'm having some space. I will be writing down here scrap value of raw materials. Alright. Factory overhead fixed is 3,60,000 per annum. Factory overhead, fixed factory overhead is 3,60,000 per annum. Can I write down in total figure? Yes. What will be for 3 months? 3,60,000 divided by 12 multiplied by 3. 90,000. You can even write down 2,70,000 over here. Because it is fixed. Variable is 10 per unit. Variable factory overhead is 10 per unit, will be 45,000 because we are manufacturing 4,500 units. Semi-variable will be a difficult task. Semi-variable is 1,08,000 per annum up to 50% capacity. We are working at 50% capacity and it is 1,08,000 not for 3 months. It is for per annum. We are working at 50% capacity. So it will be 1,08,000 per annum into 3 divided by 12. As simple as this. 1,08,000 into 3 divided by 12. It is 27,000. This is semi-variable, but they all are factory overhead. Sir, semi-variable should we not write down for 9 months also? Wait a while. When we will be doing 9 months, we will be writing them. Sorry. Administrative overhead is 5,18,400 per annum. Alright. prime cost plus factory overhead is which cost? Factory cost plus other administrative overhead will be which cost? Cost of production. I can directly write down this is my cost of production. Even COGS. Why? There is no opening WIP, closing WIP. There is no opening finished goods, closing finished goods. Why it is not? Because we are finding out cost at 50% capacity level. That is 4,500 units. So we are assuming we are manufacturing 4,500 and we are selling 4,500. So there is no opening and closing stock concept. Alright. So there is no opening, closing, plus or minus. Plus administrative overhead, which they have given 5,18,400 per annum. 5,18,400. My 3 months will be 5,18,400 into 3 divided by 12. 129,600. Selling overhead are incurred at 8 per unit. Yes. Then also it does not matter. Is it alright? But understand, administrative overhead normally should be treated as a selling part and not as a production part. What administrative overhead I told you will be added in cost of production, like research and development, testing, quality control. These are all overhead administrative which are added to cost of production. Now, if just administrative overhead is given, you should think that it is not quality management and it is accountant salary. Because it is more normal. There will be accountant salary always. There will be quality control salary sometimes. Alright. So we should treat it as a selling or deal. But if you treat it, if you just assumed to be production and you write before cost of production, it is absolutely alright. It will not make any difference to the answer. At least this answer. Plus selling overhead 8 per unit. Selling overhead multiplied by 8. It is 4,500 multiplied by 8 is 36,000. This is good. Try to concentrate. Each unit of raw material yields a scrap which is sold at a rate of rupees 5 per unit. What does this mean is, if you manufacture 1 unit, there will be 1 unit of scrap. Is it possible? Yes. Your raw material might be such that only part of the raw material is used in your production. Part is a scrap. If the part is a scrap, it can be sold, yes. At what rate it can be sold? 5 per unit. So if you manufacture 4,000 units of your finished goods, there is a scrap of 4,500 units. Is it alright? And it can be sold at a rate of rupees 5. Please understand, your normal production is not scrapped up. How much you are producing in this 3 months? This all 4,500 is not a scrap. When you process your raw material yields a scrap of 4,500 units. That is 1 unit manufactured, there will be 1 unit of additional scrap, which can be sold at 5 rupees. What you should do with this income? Income related to any expenditure should be reduced from the expenditure. You have learned it in finance also. Interest into bracket 1 minus T. Why you take after interest cost? Because you are getting tax benefit just because you have incurred your interest cost. So any income related to specific cost should be reduced from the cost. We will reduce our raw material cost by this money. How much will money we will be getting? 5 rupees per 5 per unit. I am deducting it from here. Scrap of raw material 4,500 into 5. 4,500 into 22,000. Actually, it should be reduced from cost of raw material, but it is all right if you reduce it from prime cost. All right. In next 9 months, you are working at 80% capacity. During the first 3 months, the selling price per unit is rupees 145. We can easily find out cost of sales plus profit will be is equal to sales, and here the sales is clear. It is 4,500 into 145. 652,500. I am finding out all possible answers. I can easily find out prime cost. 1,80,000 plus 1,44,000 minus 22,500. 3,01,500. 3,01,500 plus 90,000 plus 45,000 plus 27,000, 463,500. $4,63,500 plus 129,600 plus 36,000. 629,100. And profit will be 652,500 minus 629, 23,400. All right, we are going to next 9 months. In next 9 months, you are working at what level of capacity? 80% of capacity? 100% of capacity is 3,000 units per month. It is 36,000 per annum, so it is 3,000 per month. 80% capacity is 2,400 units per month. And we are talking about next 9 months. So 2,400 into 9. It is 21,600 units. So in 9 months, we are talking about 21,600 units. We have already talked about 4,500. What will be direct material? 21,600 into 40. So only in inner column I have written only multiplied by 40. 21,600 multiplied by 40 is 8,64,000. 21,600 into 30. 21,600 into 30. I can give pay of 6,48,000 provided it is more than 48,000 per month. So let me first write down 6,48,000. But what is the minimum wages? 48,000 per month multiplied by 9, which comes to 4 lakh. It is so much low. Yes, 4,30,000. 2,000. So what pay I will do? 6,48,000 or 4,32,000? 6,48,000. I will not do 4,32,000. Do you understand this? There is only one labor hire. Understand? Oh, everything is manufactured by one labor. What he is promised? Per month, you will be getting 30 per unit. So if 1,000 units are only manufactured per month, you will be getting 30,000 rupees. No, it is subject to minimum, how much rupees? 48. So you will get 48,000. But if you have manufactured 2,000 units per month into 30, what happens? What is your pay? Then you will be getting 60,000. Your pay is not limited to 48,000. It is subject to minimum 48,000. So it is 6,48,000. Scrap value will be 21,600 into 5. 1,08,000. I will be getting prime cost. Fixed factory overhead I have already done. Variable factory overhead is 10. So it will become 2,16,000. Semi-variable overhead I will be doing. Please concentrate. The semi-variable overhead is somewhat typical. 1,08,000 per annum up to 50% of capacity. Alright. You are working at 50% or 80% of capacity? 80%. So it is 1,08,000 per annum up to 50% of capacity. 1,08,000 up to 50% of capacity into 9 divided by 12. So this will be your minimum cost. 1,08,000 into 9 divided by 12. It is 81,000 rupees. But additional 46,800 will be incurred for every 20% increase in capacity. For every 20% increase in capacity. So 46,800 rupees more will be incurred if you are going to operate for more than 50% of capacity for 20%. So for additional 20%, what cost you will be incurred? Additional 20%. What is the cost that will be incurred? 46,800 rupees. But 50 plus 20% is 70. You are working at 70 or 80% capacity? 80. So for additional 10% of capacity, you will be incurring half of this. 46,800 into 1 by 2. That is half of this. That is 23,400. Can you first give me the total? It is 81,000 plus 46,800 plus 23,400. It is 151,200. I will be having semi-variable cost of 151,200. Please concentrate over here. You all got it? And so easy term. There are n numbers of problem over here. 1,08,000 is alright. It is your fixed. For 50% of capacity, you will be incurring for 9 months 81,000 rupees. For additional 20% of capacity, You are working with 80% of capacity for how many months? 9 months. So this 46,800 is for how many months? 9 months. You have assumed here for, they should give us that if in a month I am working over 50% of capacity, in a year I am working over 50% capacity, when if I am working over 50% capacity, my cost will increase by 46,800. Is that right? See, my class right now is, say my total capacity is 100. This class is 50 students. If additional 10 students will be there for 1 month, for 1 year, my additional cost will be this much. But additional cost also should be given. We have understood this 46,800 is a cost of 9. Is it written? An additional 46,800 for every 20% increase in capacity. Tell me, in 4th month you are working at what capacity? In 4th month, first 3 months you are working at, in 4th month you are working at 80% capacity. So in 4th month also this 46,800 should be incurred. It is not written this per month or per year. It is not written whether it is per month. It is not written whether it is per year. We are assuming it is for 9 months. It is assumed that it is for 9 months. We are assuming that 46,800 is for 9 months. And please understand the second provisions which I want to take in this is, this answer is incorrect. This is all right. If we assume this for 12 months, what we should do? Anyone can tell me? We need to do into 9 divided by 12, or we should add it over here. Is it all? Which is done into 9 divided by 12. Is it all? Or understand. What is increase in cost? 46,800. Okay, it is for 9 months. And what is clearly written? Try to understand. 46,800 for every 20% increase in capacity or any part thereof. So if there is a 5% increase in capacity, your cost will increase by 46,800. If there is a 10% increase in capacity, your cost will increase by 46,800. If there is 15% increase in capacity, your cost will increase by 46,800. If there is a 20% increase in capacity, your cost will increase by 46,800. So up till here it is correct. Alright. If there is a 25% increase in capacity, 20 or 25? 25. Then I think as per the language used, you should take over here also how much? 46,800. What is increase in capacity after 70%? Can you tell me? 10%? Is it all? What is written? Rupees 46,800 is your additional cost for any 20% increase in capacity or part thereof. There is nowhere written that it will proportionately increase by 46,800. Here what is understood? You are getting it? At 20% increase in capacity, what is the increase in cost? 46,800. Do this 46,800 divided by 20. It is? Only divided by 20. 2,340. See what you are assuming when you are doing this. See, I am doing this because it is given in the answer, right? But you need to understand what is the mistake in the question. 2,340 rupees will increase as a cost for every 1% increase in capacity. This is what you are assuming, right? 20% increase in capacity. So what cost you have increased? 46,800. How? 2,340 into 20 will be how much? 46,800. Now next 20% is increasing or 10% is increasing. Then you have done this 2,340 into 10. Is it all right? which I think as per language is not correct. What is written? Your cost will increase by 46,800 for every 20% increase in capacity or part thereof. Or part thereof. Is it alright? This is nothing but, I'll tell you, try to understand what is this. These are known as a step fixed cost, and it should be considered in this manner only. Say you are a bus organizer of a school, bus coordinator of a school. Right. Your bus is very small and can accommodate only 3 children. And cost per bus will be 10,000. Say it is per month. Alright. So what will be cost for 3 children? 10,000. Alright. If 4 children are traveling, and assume we are not in India, alright, so that you can accommodate one over here. Is it alright? You can accommodate only 3 students. For one more student, you will have to conduct another bus, which will carry one student. 2 will be empty. 2 seats will be empty. This will cost you how much? 10,000 per month. So for 3 students, what is the cost? Can you tell me? Total 10,000. For 4 students, what is the total cost? 20,000. 5, 20,000. 6, 20,000. 7, 30,000. You will have to hire one more bus for 7 students. Alright. So you cannot do this. That if cost per 3 student is 10,000, then cost for 1 student is 10,000 divided by 3. Alright. At least the language which is written, you cannot interpret in this manner. Additional 46,800, additional 1 bus for every 20% increase in capacity, for every 3 students increase, or any part thereof. So even if 1 student increases after 50%, you will have to hire another bus which will cost you 10,000. So we have done this calculation. We will be writing down this answer. It will match with suggested answer. But believe me, this answer is also absolutely correct. 1,08,000. Tell me, what is the increase in the cost? 46,800 plus 46,800. This is for 50% capacity. This is for 20% of capacity. This is for, because it is written, for any part thereof also additional cost incurred will be 46,800. And I am assuming this cost is per annum, so it is into 9 divided by 12. This is an alternative approach which is absolutely correct. As per my opinion, it is better than what we have written in the answer. Right? But in this answer, we are going to write 1,51,200. Administrative overhead is fixed. So I can just do subtraction. 5,18,400 minus 129,600, 388,800. Selling overhead is rupees 8. 21,600 into 8, 172,800. Cost of sales I can find out. You just need to do some totaling. 8,64,000 plus 6,48,000 minus 1,08,000. 14,04,000. 14,04,000 plus 2,70,000 plus 2,16,000 plus 151,200 is equal to 20,41,200. 20 lakh 41 200 plus 388 800 plus 172 26 lakh 2800. All right. I am solving the answer. I am not writing down total column. You will have to write it down, but I am not writing down the total column. They say calculate a selling price per unit for remaining 9 months to achieve an annual profit of 8,76,600. What is the profit required? 876,600? 876,600. That is annual profit. Then what should be profit for 9 months? Because first 3 months your profit is already there, right? So what should be profit for 9 months? 876,600 minus 23,400, 853,200 should be your profit for 9 months. If the profit for 9 months is 853,200, what should be sales for 9 months? 26 lakh 2,800 plus 853,200. So your sales should be 34 lakh 56,000. If your sales will be 34 lakh 56,000 and you are selling 21,600 units, what should be selling price per unit? 34 lakh 56,000 divided by 21,600, and that will be for 9 months. That is 160. What you were selling in first 3 months? You were selling at what rate in first 3 months? 145. In next 9 months, you will have to sell at 160 rupees to get an annual profit of 8,76,600. Again, the total answer is not given in the book, but I think you should write down total column also if the same question is asked in examination. Why? They are asking us a prime cost. Now, prime cost is always per annum, right? You never find out prime cost per month. You find out normally per annum. So, total column also should be found out. You can do it later on as far as total column is concerned. So, very nice question as far as this part is concerned. And I think it is not written in a proper manner. What is intended and what is written is something different. Yes. 1.9. XYZ, a manufacturing firm, has revealed following information for September 2019. Raw material 1st September, 30th September. Now understand, we will be preparing cost sheet for only 1 month. Which is which month? September 2019. There is raw material opening and WIP opening and closing. The firm incurred following expense for targeted production of 1 lakh units during the month. Consumable stores and spares of factory, research and development, quality control cost, packing cost, lease rent of production asset, administrative expenses, selling and distribution expenses, finished goods opening is nil and finished goods closing is given in units. Defective output, which is 4% of targeted output production, realized 61 per unit. This will be important point. Closing stock is valued at cost of production excluding administrative expense. So administrative expenses should be forming part of administrative and selling overhead, right? Cost of goods sold excluding administrative expenses amounts to 78,26,000. Direct employee cost is half of cost of material consumed. Selling price of output is 110 per unit. You are required to calculate the value of material purchased, which will be a question mark for us. Prepare a cost sheet showing the profit earned by the firm. We will be preparing a cost sheet with 2 columns. This will be cost sheet for September 2019. The answer will be outer column. Alright. First try to understand, I am marking where I will be writing each and every expenditure, because here directly it is not given. It is name of expenditure which is given. Like consumable stores and spares of a factory. Tell me where you will write down consumable stores and spares of the factory. You will be writing down in factory overhead. It is correct. It is factory overhead. I will be writing over here. I will be writing it in factory overhead. Research and development cost. It is the production overhead forming part of production. Administrative overhead forming part of production. Quality control cost, again same. Packing cost. Selling and distribution overhead. Lease rent for production asset. You have taken factory on the lease. It is rented factory and rent of that factory. It should be factory overhead. Alright. I'll give you 2 opinions and both opinions are correct. If this factory is used only to manufacture this 1 lakh units, it should form a part of prime cost as a direct expenditure. Why? Why you are incurring full rent? To manufacture n numbers of product or only one product? Only one product. Then it will be forming part of prime cost. If it is used for manufacturing A, B, C, D, E and you are finding out cost of only A, it will be regarded as factory overhead. Both point of view are correct. Both will be giving you same answer. It will give you different answer, but ultimately you will have to find out or you will have to go with one opinion. Suggested what is given, both opinions are given. They have given answer by one opinion and then they have given answer by another opinion. I think it should be treated as a factory overhead. I will be treating it as a factory overhead. Can be treated as a forming part of prime. Are you getting it? What is included in prime cost? Any expenditure which is directly related only to that product will be always part of a prime cost. Manufacturing. Administrative expenses general, I will be taking this in selling and distribution. Selling and distribution should be taken as selling and distribution. Finished goods opening and closing is all right. And this will be reduction from cost of production. I'll tell you why it will be there. Closing stock is valued at cost of production, cost of direct employees cost. So this is direct labor. Selling price of output is 110 per unit. I am starting with raw materials. I will be tick marking in my question whatever I write it down. Opening minus closing plus purchase. Opening is 2,42,000 plus purchase I am not knowing minus closing is 2,92,000. Purchase figure is not given and they have asked find out value of material purchased. Anything added in prime cost? Yes. Direct employee cost is half of cost of material consumed. So direct labor will be half of material consumed. So whatever is the outer column of material consumed, half of which will be direct labor, and I will be getting answer of prime cost. Consumable stores and spares, I will be taking all the things which should be included in factory overhead. Consumable stores and spares of a factory. $3,50,000. Research and development, no. Quality control, no. Packing cost, no. Lease rent of production asset, 2 lakhs. Lease rent is the 2 lakhs that we have written. Then there's a selling and distribution. Defective output, I will be reducing it from cost of production. Closing stock, direct employee we have taken into consideration. Alright. So we can total out. This is 5,50,000. I will be getting gross factory cost. Add opening WIP minus closing WIP. Both are given. Opening WIP is the 2 lakhs. Closing WIP is 5 lakhs. I'm making a mistake. I'm not tick marking what I have already taken into consideration. I will be getting answer of net factory cost plus administrative overhead related to production. This is a good sum because you come to know that what overheads we are writing down, they are in which nature. It will be research and development 2,50,000. Quality control cost 2 lakhs. Administrative expenses, no. They have specifically termed no, that administrative expenditure should not form part of cost of production. Selling and distribution 4,13,000, it is alright. Defective output, 4% of targeted production realizes 61 per unit. Alright. That will be deducted from here, but can I say this answer will be cost of production. And what is our targeted production? 1 lakh units. But believe me, 1 lakh unit will not be manufactured. Why? there is a defect of how much? 4%. So it will be 1 lakh minus 4%. So how many units will be, it is 96,000? No, sir, I should not write it down over here. It is 96,000 units. Please understand that 4,000 units which are defective, can you sell it? Yes. See, in previous question and this question, the concept is totally different. Huh? In previous question, you were using a raw material for one output. There was one additional scrap of raw material. Here, out of 1 lakh units, your 4,000 units are being scrapped. So there is a loss, like we were doing in process. Now 1 lakh will be manufactured, or only 96,000 will be manufactured? 96,000 will be manufactured. Can this 4% be sold? Yes, at the rate of 61. So I get income of from sale of scrap, 4,000 into 61. 2,44,000. And this we are doing new. Why I am reducing it from cost of production? Because it is not from raw material, it is a output. So it is a correct answer. So I have not deducted it from here, right? Agreed? That is the correct answer. But why I am deducting? Have I taught you any time? It is income. It should be deducted from the cost. It will reduce your cost. Alright. If this was 0, scrap value was 0, then I would have written 0 over here. Over here, I would have written what? 0. Exactly. Try to understand, when I write down scrap value as a negative figure, I am treating this 4,000 units as a normal loss. Normal loss is valued at scrap value or 0. This is not a valuation rule for process. It is valuation rule for normal loss. Normal loss is valued at scrap value. Valued means it is written on debit side or credit side. Normal loss in process account. Credit side, when you write it down on credit side, it reduces the cost. You remember NC and O? What is normal cost? Total cost minus a scrap value of normal loss. This is minus scrap value of normal loss. Is it alright? Alright. Suppose this answer was 0. Is it alright? And this answer was say 10 lakhs. 10 lakhs rupees is actual manufacturing cost of how many units? 1 lakh units? But now there are 1 lakh or only 96,000 units? 96,000. So what you were saying, what will happen? The cost of good unit produce will increase, and it is still happening. Huh? Yes, it is reduced by some money, but it is not reduced by cost of production. It is reduced by only scrap value. If the scrap value was 0, my normal loss cost would be borne by good units produced. If you are in an interview, you are told that this is 0. Can you tell the person who is asking you question where the normal loss is written? It is absorbed by good unit produced. Try to understand. You were writing down over here 1 lakh units, and suddenly you are writing how many units? 96,000 units. So cost per unit is increasing. Cost is not increasing, but cost per unit is because number of unit manufactured have decreased. Is it alright? We will keep this as in original state. It is 2,44,000. This will be 96,000 units. So you will not tell me we have not done this. We have done this in process costing. Normal loss will be valued at scrap value. It will reduce the cost of good units produced. So this will be manufacturing cost of, and it is not 10 lakhs. We have just assumed it 10 lakhs. Let us go ahead. So we have done even this. Opening stock of finished goods is 0. I am changing the page. Cost of production 96,000 units will be, I will be carrying it forward from this page, plus opening stock of finished goods is nil, minus closing stock. How many is closing stock? 5,000 units. Should be valued at cost of production. What is cost of production? I will be getting it for how many units? 96,000 units. Whenever I get it, I will be writing it down. It is valued at COP. I will be getting COGS plus administrative and selling overhead. Packing cost secondary per unit of goods sold is 2. Help me out. How many units into 2? How 91,000? Exactly. 96,000 units were manufactured. Opening is 0 and closing is 5,000. So sold will be 91,000. into 2. This is 1,82,000. This I have considered. Administrative expenses 2,24,000. Selling and distribution 4,13,000. I have considered this, I have considered this. Closing stock is valued at cost of production. I have written it in inner column. Cost of goods sold, excluding administrative expense, amounts to 78,26,000. COGS is 78,26,000. This is 78,26,000. I am also knowing total of this. I have taken into consideration this. Selling price of the output is 110 per unit. I will be getting cost of sales plus profit is equal to sales, and my sales will be 91,000 units into 110. It is 1,10,00,000. I think I can easily find out my cost of sales. 1,82,000. Always find out what you can easily find it out first. 2,24,000 plus 4,13,000, 8,19,000. This will be 78,26,000 plus 8,19,000 is 86,45,000. And if this is 1 crore 10,000 minus 86 lakh 45,000 is 13 lakh 65,000. My point is, I am having COGS, right? I am not having COP, that is cost of production. I am not having even closing stock. So this both figures are missing. Do you agree? If one of the figure was available, I could have found out COP. Alright, like if a closing stock figure was available, say it was 26,000. Alright, then I could have understood that this is 78 lakh 26,000 plus 26,000, this figure. But both figures are missing. I'm giving you 2 minutes. Can you find out both the figures? Anyone who got the answer? Yes, how you have found out the answer? Alright, just a minute. 78 lakh 26,000 divided by 91,000. Alright, what is the answer? 86. Please understand this 86 is cost of producing 1 unit. Sir, how it is cost of producing 1 unit? Cost of production will be also valued at 86. Closing stock is also valued at 86. So COGS will be also valued at 86. Is it alright? See, in your trading account, you do this opening plus purchase minus closing. Is it alright? Everything is valued at cost. Then you can find out the cost if you are having the total answer of at least COGS. So 5,000 into 86, I will be getting the answer. Four lakh 30,000. I can even find out directly this by 96,000 into 86. 82 lakh 56,000. And now you can verify whether your answer is correct or not. 82 lakh 56,000 minus 4 lakh 30,000. It is 78 lakh 26,000. This was excellent point as far as this question is concerned. There is one more excellent point in this question. It is 82 lakh 56,000. This total answer was 2 lakh 50,000 plus 2 lakhs minus 2 lakh 44,000. It is 2 lakh 6,000. If this was 2 lakh 6,000, what would be net factory cost? Net factory cost will be 82 lakh 56,000. Instead of doing plus, I'll be doing minus. 2 lakh 6,000 is 80 lakh 50,000. Now we are going on reverse direction, this manner. Whatever is subtraction, we will be adding it. Whatever is addition, we will be subtracting it. You understand this, right? If we assume this as x, we want to find out x. X plus 2 lakhs minus 5 lakh is 80 lakh 50,000. So what is x? 80 lakh 50,000 plus 5 lakhs minus 2 lakhs. It is 83 lakh 50,000 minus 5 lakh 50,000. 78 lakhs. Now it is difficult. Again, two figures are missing. What is missing? Material purchase and direct labor. They have given direct labor in a weird manner. They say direct labor is half of material consumed, not even material purchase. They say direct labor is half of material consumed. What is the total prime cost? 78 lakhs. That's all right. If I assume this as a 2x, please concentrate. This is half. All of you agree? If I assume that raw material is 2x, then labor is x. Then labor is x. All of you agree? All right. Sir, why not to assume this as x? Can you assume this as x? Yes. Then this will be 0.5x. Whatever you like, it is absolutely all right. Can I write down 1.5x is equal to 78 lakhs? Yes or no? X plus 0.5x is how much? 1.5x is equal to 78 lakhs. 1.5x is equal to 78 lakhs. Also, I will be getting answer of x, right? If 1.5x is equal to 78 lakhs, I get answer of x. 78 lakhs divided by 1.5. 52 lakhs is x. Instead of x, you should write down 52 lakhs. And instead of 0.5x, you should write down 52 lakhs divided by 2. That is 26 lakhs. Again, an excellent point. If this is 52 lakhs, I can easily find out raw material purchase. So 52 lakhs plus 2,92,000 minus 2,40,000. 57,32,000 is the raw material purchased. Raw material is 2,42,000. Here there is a mistake. This is 2,42,000. 242, 292. 52 lakhs plus 2,92,000 minus 2,42,000. 52,50,000. Excellent question, yes. 2 points were excellent. How to find out this both answer? We were knowing that COGS is always valued at cost. Closing stock is also valued at cost. And so cost of production is also valued at cost. We were having COGS in units also and in rupees also. So we can find out cost of manufacturing per unit, at which your production is also valued and your closing stock is also valued. If this question was having an opening stock and it was given, it is say valued at 81, believe me, this problem is now not solvable. Is it all right? Because production is valued at 86, opening stock is valued at 81, closing stock is valued at 86. So COGS is valued at, you don't know. You will have to find out weighted average, right? You don't know. But if a COP is valued at 86, closing stock is valued at 86, there is no opening stock, then COGS is also valued at 86. Sorry. This is question number 1.10. This is 1.10. X Limited manufactures two types of pens, super pen and normal pen. The cost data for the year ended 30th September 2019 is as follows. So it is 1 month data, but it is of both the pens. Direct material of super pen, normal pen, direct wages of super pen, normal pen, and production overhead of super pen and normal pen. It is further ascertained direct material cost in super pen was twice as much of direct material in normal pen. Direct wages for normal pen were 60% those of super pens. Production overhead per unit was the same rate for both types of product. Administration overhead was 200% of direct labor for each. Selling cost was rupees 1 per super pen. Production and sales during the year were as follows. Super pen 40,000 units were produced and 36,000 units were sold. Selling price was 30 per unit for super pen. Prepare a cost sheet only for super pen. Right. So we will be preparing cost sheet only for super pen. Even we have drawn 3 columnar. Please understand, we want answer of only super pen. For my reference, I will be writing total answer also and normal pen also, right? But please understand that these are my working and this is my answer. So I am not required to total my working column, but I want answer of super pen, right? Instead of preparing all the working notes separately, this is a good idea. Direct material is 8 lakhs. What is 8 lakhs? It is for super pen, normal pen or total? It is total, right? Direct material is 8 lakhs. Direct wages is 4,48,000. Production overhead. So is there any direct expenditure? No. So total of this will be prime cost plus production overhead. Production overhead is 1,92,000. I will be getting factory cost. There is no opening WIP, closing WIP. There are no other administrative overhead which are given. Administrative overhead were 200% of direct labor. I can consider this as a cost of production. Yes. I can consider this as a selling and distribution overhead. The answer is yes. That's all right. I am assuming it as a cost of production. It is note or assumption? Assumption. Please understand, you are studying in intermediate. Your assumption might be different. It is not compulsory what I am assuming you assume. It is assumption. So only it is, the name is assumption. All right. You can assume something else. I can assume something else. So administrative overhead will be added again. Which is 200% of direct labor. I will be getting COP. Add opening finished goods is not given, minus closing finished goods will be there. And it will be only in super pen, right? Because closing stock and other information of only super pen is given. I will be getting COGS plus selling and distribution. Selling cost was rupees 1 per super pen multiplied by 1. And super pen sold was 36,000 units. So I can do this. 36,000 into 1 is 36,000. I will be getting cost of sales plus profit is equal to sales. You are given selling price? Yes. Selling price for super pen was 30. So 36,000 into 30. Ten lakh 80,000. Believe me, it is just a distribution of cost between a normal pen and super pen. Otherwise, everything is simple. Closing stock of finished goods is, you are producing 40,000 units. You are producing super pen 40,000 units. And you are selling 36,000 units. So closing stock will be 4,000 units. And now we are talking only about super pen. Alright. I am segregating direct material 8 lakhs rupees. Direct material 8 lakhs rupees into normal and super pen. How many units of normal pen you are manufacturing? 1,20,000 units. And how much unit of super pen you are manufacturing? But you are selling whatever, but you are manufacturing 40,000 units, right? So I think it is 1,20,000 and 40,000. It should be distributed in the ratio of 120:40. Yes or no? Why no? See, the material used in super pen might be costly. The material used in normal pen might be cheaper. The name suggests that super pen might be some costlier thing. So it might be using some costly raw material, and it is given. Direct material cost in super pen was twice as much as a direct material in normal pen. Alright. So what should be the good ratio to distribute? I'll tell you. Multiplied by 2, multiplied by 1. What is this answer? 1,20,000. This is 80,000. Sir, so it is 80,000 rupees? No, I am not saying the raw material cost is 1 and 2. But if you multiply 1 over here and if you multiply 2 over here, this is a good ratio to distribute the cost of rupees 8 lakhs. Eight lakhs in the ratio of 120 is 280. It is 200. 8 lakh divided by 200 into 120. It is 4,80,000. Remaining 3 lakh. I have distributed material cost. 4,80,000. I was interested in super pen, which is 3,20,000. Let me give you an idea why we are correct. How much pen you are manufacturing of normal pen? 120. What is raw material cost per unit of normal pen? Find it out. 4,80,000 divided by 1,20,000. Rupees 4. Now this is the correct cost. Year 1 and 2 that we have taken is just for finding out a good ratio. This is a correct cost per unit. What is over here? 3,20,000 divided by 40,000, not 80,000. 80,000 just we have found out for reference. It is rupees. And this is already given. Alright. That cost of raw material of super pen is double as compared to cost of raw material of. So we took year 1 and 2. So that the ratio is correct. Is it alright? See, ratio of 4:8 and ratio of 1:2 is one and the same. Right? This is direct material. We will have to do direct labor. Direct labor total is 4,48,000. 4,48,000 direct labor should be distributed in normal pen and super pen. A good ratio is 1,20,000 and 40,000 if the labor cost per unit of normal and super pen is same, but the labor cost is not same. Direct wages for normal pen was 60% of those of super pen. See what I am multiplying. Multiplied by 0.6 multiplied by 1. 0.6 and 1 is a labor cost per unit? No. But it is a good multiplication to find out a ratio in which you can distribute direct labor cost. This is 72,000. This is 40,000. It is 72:40. You can distribute it. 4,48,000 multiplied by 72 divided by 112. 2,88,000. 4,48,000 minus 288. It is 1,60,000. 288, 1,60,000. We are not interested in normal pen. You can start solving only super pen. It is a 4,80,000. Production overhead total is 1,92,000. Again a working note. 1,92,000. Production overhead per unit was at a same rate for the both types. So I can distribute it in the ratio of 1,20,000 and 40,000. Now you are getting it? Here the rate is same. So you can distribute it between 1,20,000 and 40,000. It is 120:40. It is 1,44,000. 1,92,000 minus 144. 48. One lakh 44,000, 48,000. I am totaling out only super pen because I am interested only in super pen. 5,28,000. Administrative overhead 200% of direct labor will be 3,20,000. Cost of producing 40,000 units will be 8,48,000. If cost of producing 40,000 units is 8,48,000 divided by 40,000 is cost of manufacturing 1 unit, which is 21.2. So closing stock is normally valued at 21.2, which is my cost of production. So closing stock will be 4,000 into 21.2, which is 84,800. So cost of goods sold, which are 36,000, will be 8,48,000 minus 84,800. 763,200. Your cost of sales will be 763,200 plus 36,000. 799,200. 10,80,000 minus 799,200. 2,80,800 will be profit of super pen. So now the question was weird because even if it was carrying 10 marks, they have not asked you the question of normal pen. They would have given. There is only one thing they should have given. What is the sales of normal pen? If this was given and the selling and distribution cost of normal pen, we could have found out full column of normal pen also, full column of total also, but that is not asked. Sir, can we prepare only column of super pen? Yes. If you are confident, you can prepare only column of super pen. We are doing two more questions which are just repetition. See 1.11. XYZ Limited is engaged in manufacturing of toys. It can produce 4,20,000 toys at its 70% capacity on per annum basis. It can produce 4,20,000 toys at its 70% capacity on per annum basis. 4,20,000 is 70% capacity. Can you tell me 100% capacity? It is 6 lakh at 100% capacity. And the question is also of toys. The company is in the process in determining its sales price for the financial year 2021. It has provided the following information: direct material, direct labor, fixed, variable and semi-variable. I hope it is given in correct way this time. Rupees 5 lakh per annum up to 60% capacity and rupees 50,000 for every 5% increase in capacity or part thereof up to 80% capacity, and thereafter 75,000 for every 10% increase in capacity or part thereof. So the mistake is repeated, believe me. They have not given 50,000 is for 1 month, 1 year, or it is for only that part. They have not given that. Company desires to earn a profit of 25 lakhs for the year. The company has planned that factory will operate at 50% capacity for first 6 months, 75% capacity for further 3 months, and balance 3 months factory will operate at full capacity, that is 100% capacity. So 6, 3 and 3. First 6 months 50%, next 3 months 75% and next 3 months 100%. This is written in this particular paragraph. Determine the average selling price at which each of the toys should be sold to earn the desired profit. Given the above scenario, advise whether the company should accept an offer to sell each toy as 130 per toy, 129 per toy. That is all. We will be preparing our cost sheet 4 columnar. And it will be per annum. First column will be for 6 months, next will be for 3 months, next will be for 3 months, and last will be total. In first 6 months, you are working at 50% capacity, which is 3 lakh toys. 50% capacity is 6 lakhs into 50%. No, it will not be 3 lakhs. We'll have to find out per annum, per month, right? 6 lakhs is per annum divided by 12 is 50,000 toys per month is 100% capacity. So first 6 months, I can do this. 6 months, 50,000 toys into 50% capacity multiplied by 6 months. It is 1,50,000 toys. Next 3 months, 50,000 toys are per month at 100% capacity. We are working at 75% capacity multiplied by 3 months. This is 50,000 into 75% into 1,12,500. And for next 3 months, you are working at 50,000 toys capacity for 100% capacity for 3 months. That is again 1,50,000. So first 6 months you are selling 1,50,000 toys. Next 3 months you are selling 1,12,500 toys. Next 3 months again 1,50,000 toys. Up till semi-variable, everything will be easy. Direct material is a 60 per unit. Direct material into 60. 1,50,000 into 60 is 90 lakhs. For here also it will be 90 lakhs. 1,12,500 into 60. 67,50,000. Direct labor is 30 per unit. Direct labor is 30 per unit. No minimum wages, no. It is 1,50,000 into 30, 45 lakhs. So in third column also it will be 45 lakhs. This is 1,12,500 into 33,75,000. I will be getting prime cost plus indirect overhead, all are factory, and there are no other overheads. Will operate at yes, also all are factory overhead plus factory and other overheads. Fixed 65,50,000. Fixed total is 65,50,000. Do you understand why I have done total column? I am not doing total of everything. But whenever I need the segregation, I am writing just in total column. 65,50,000 divided by 2. That is 6 months. 32,75,000. Here it will be divided by 3. 65,50,000. Again 32,75,000 divided by 2. 16,37,500. My question is, should it be distributed in number of units produced? Should it not be distributed in number of units produced? Why? Because it is fixed. Fixed is not dependent upon number of units manufactured. Say in first 6 months, even you were working at 10% capacity, the fixed cost would have remained thus. Variable 15 per unit. Variable into 15. So it will be 1,50,000 into 15 will be 22,50,000. In this also the number of units are same, so it is 22,50,000. And here it will be 1,12,500 into 15. $16,87,500. And the difficult part, semi-variable overhead. We are doing semi-variable overhead for first 6 months. You are working at what capacity? 50% capacity. So my answer will be easy. It is 5 lakh per annum up to 60% of capacity. So for first 6 months, I am working at 50% capacity. It will be 5 lakhs per annum. So it will be 5 lakhs into 6 divided by 12, which will be 2,50,000. Next 3 months, I am working at 75% of capacity. And I will incur this 5 lakhs into 3 divided by 12, ₹1,25,000 up to what capacity level? Up to 60% of capacity, it remains 5 lakhs. Up to 60% of capacity. And now what they say? And ₹50,000 for 5% increase in capacity or part thereof, up to 80%. So it is coming up to 80%. For every 5% increase in capacity, you will be adding 50,000. Over and above 50% or over and above 60%? Over and above. So up to 60% of capacity, your cost is remaining 5 lakhs. Above 60%, how much percentage increase is there? 15%. So can you tell me how much cost should I add? 50,000, 50,000 and 50,000. 50,000 for 5%, next 5% 50,000, Next 5%, 50,000. Total 15%, I will be adding 1,50,000. This will be 2,75,000. Have you seen the answer? What they are doing? They are taking this 50,000 increase per annum. Alright, so we will be also to match the answer with the book. Please understand, previous question was asked by ICAI only. The suggested answer is taken from ICAI only. Both are having a different assumption. They take this 1,50,000 over year. So how they are calculating, please understand. What is the total cost? 5 lakh. Plus, how much percentage increase in capacity? 50. 50,000 for every 5%. So total 1,50,000. So total cost is 6,50,000 per annum. But this is only for 3 months. So into 3 divided by 12. 6,50,000 into 3 divided by 12. What is the answer? 1,62,000. Same wordings were written? Yes. Let me tell you even the question. What was question number? It was 8. Year 46,800 were taken for 9 months. Year 50,000 is taken per annum. Here also nothing is written. In our question also nothing is written. It is 162,500. This is more correct answer than question number 8. 162,500 will be for next 3 months, and for next 3 months you are working at 100% capacity. So first you will be incurring cost of 5 lakhs. For how much percent capacity? 60% capacity. Remaining 20% capacity you will be incurring additional cost of 2 lakhs. Why? What they have given? 60 to 80%. For every 5% increase, there will be 5 lakhs rupees cost. So for 20% increase, there will be 2 lakhs rupees cost. 50,000 4 times. In capacity or part thereof, up to 80% capacity. And 75,000 for every 10% increase in capacity thereafter. So after that, we are still increasing 20%. So 75,000 into 2, 1,50,000. You understand this, right? This is 50,000 into 4. This is 75,000 into 2 times. Total cost is 8,50,000 into 3 divided by 12. It is 21,250? No. 2,12,500. I am writing semi-variable cost in my cost sheet. This is 2,50,000, 162,500, 2,12,500. Included. Yes. It is. You want this explanation? Alright. Up to 80%, your cost will be this, like 5 plus 2 lakhs. Is there any other cost? No. Semi-variable, earn a profit 25 lakhs. Company has planned that factory will operate at 50% capacity. This we have determined. All the cost we have taken into consideration. Average selling price of each toy. Alright. We can find out cost of production or even cost of sales. I can directly write down this as cost of sales because there is no other cost. It is the 32 lakh 75,000 plus 22 lakh 50,000 plus 2 lakh 50,000. 57 lakh 75,000. Yes, this is pending, right? This is 135 lakhs. This answer will be 135 lakhs plus 57 lakh 75,000. That is 192 lakh 75,000. Prime cost will be 67 lakh 50,000 plus 33 lakh 75,000. It is 101 lakh 25,000. 101 lakh 25,000. 101 lakh 25,000 plus 16 lakh 37,500 plus 16 lakh 87,500 plus 1 lakh 62,500 is equal to 136 lakh 125,000. One 35 lakhs. 135 lakhs plus 16 lakh 37,500 plus 22 lakh 50,000 plus 2 lakh 12,500. 176 lakhs. I will not be finding out all the totals, but this total is required because now we want to find out profit. 192 lakh 75,000 plus 136 lakh 12,500 plus 170. It is 504 lakh 875,000. We want profit of 25 lakhs. I will have to do sales of 504 lakhs 875,000 plus 25 lakhs 5073 75,000. And they are also telling me to find out selling price at which each toy should be sold. So how many toys I am manufacturing and selling? It is 3 lakh 4 lakh 12,500. 4 lakh 12,500 per annum. So my selling price should be 507,375,000 divided by 4 lakh 12,500. 1230 rupees. I have included one more zero over here. It is 87,500. Plus 20 will give me 529 87,500. Sales will be 529 87,500 divided by 4,12,500 units. $128.45 should be your selling price. The sum also tells me, what if the selling price is 130? If the selling price is 130, you should accept the selling price because you will be earning your desired profit. What if the selling price is 129? Even if the selling price is 129, you should accept it because you will be earning more than your desired profit. It should be a theoretical answer. No practical calculation is required as far as those questions are concerned. Why? They are saying us what? Given the above scenario, advise whether the company should accept the offer of 130 and 129. In both cases, the answer will be yes, because we will be earning our desired profit. This is all again repetition. It is C 1.12. The following data relates to manufacturing of a standard product during the month of March 2021. This is opening stock of raw material. This is opening stock of work in progress. Purchase of raw material is given. Carriage inward. Where I will add carriage inward? Direct expenditure. You can add it in even material. Alright. Any cost which is related to purchase of raw material can be added to raw material. You can add it in direct expenditure also. Direct wages, direct expense. Direct wages will be direct expense in prime cost. Cost of a special drawing. What to do with cost of special drawing? It is which type of product? Standard product. Say a car. For manufacturing a car, first you will have to design the car. Alright, how it will look. I will be adding it in which expenditure? Direct expenses. If this is a common expenditure, it can also be added to factory cost. They will be giving us one or more options. I am adding it in direct expenditure. Higher charges paid for plant. You will have to tell me what to do with higher charges paid for plant. I have explained you in previous question. I can add it in direct expenditure if this plant is used only to manufacture this standard product. If this plant is common for manufacturing other products also, then it will be added to factory overhead. I am adding it in factory overhead as in previous question. Sir, if we add it in prime cost, your answer is absolutely correct. Return of raw material will be reduced from raw material. Carriage on return. Now, what to do with this? You have written your raw material and you have paid some transportation cost. Added to which cost? Direct expense? Sure? Or it should be treated as factory overhead? Alright. Raw material or factory overhead. We will discuss it. Let us first see other expenditures which we know. Expenses for participation in industrial exhibition. This is administrative overhead. Legal charges will come after administrative overhead in selling and distribution. Salary to office staff, same. Maintenance of office building, same. Depreciation on delivery van, same. Warehousing charges. Storage charge where? It is direct or it is factory overhead? Storage expenditure. It should be treated as factory overhead, right? Is it not a part of cost of manufacturing? Cost of production? Yes. Storage is a part of cost of production. It is a factory. Stock of raw material. This is closing raw material. Stock of work in progress. This is closing WIP. Go down, rent I think will be taken in distribution. Yes. Stores overhead on material are 10% of material consumed. This is factory overhead. If this is factory overhead, this warehousing charges will go in selling and distribution. Please concentrate. Storage of raw material should be added to cost of production. Storage of finished goods is selling overhead. Storage of finished goods is which overhead? Selling overhead. Storage of raw material is forming part of cost of production. Factory overhead are 20% of prime cost. 10% of output was rejected and a sum of rupees 5,000 was realized on the sale of scrap. This we know, right? Before cost of production will reduce this. 10% of finished product was found to be defective and the defective products were rectified at additional expenditure which is equivalent to 20% of proportionate direct wages. The total output was 8,000 units during the month. We don't know what will be this rejection, right? Because the output is given. You are required to prepare a cost sheet for above period showing cost of raw material, prime cost, work cost, cost of production and cost of sales. Let us draw a cost sheet. Alright, shall we start? Try to understand. What they are trying to say is 80,000 units is output, out of which 10% is scrap. So 800 will be scrap, 7,200, and now they give this a different name. This they say is finished goods. And 10% of finished goods. What is 10% of finished goods? 720 units. Where say some having some defect. And to remove that defect, you would be having cost for removing the defect. And what is the cost is 20% of labor cost is required. That will be finding it out. First, see how I am preparing my cost sheet. I am totaling out prime cost with keeping some space plus factory. So there might be more than one cost in factory. I am keeping some space factory overhead. This will be factory cost, which is gross or work cost, plus opening WIP is there, minus closing WIP. I will be getting net work cost I am carrying forward net work cost. Add administrative overhead related to production. I will be getting answer of cost of production plus opening finished goods minus closing finished goods. I will be getting answer of COGS plus selling and administrative overhead. I will be getting answer of cost of sales plus profit. I will be getting answer of sales. Now in previous question, similar type of question, I had one problem. I had to do one by one, right? Here I can take question one by one and just put in the figures in my cost sheet. Opening stock of raw material is 80,000. So I'll be going one by one. Raw material, opening plus purchase minus closing. Opening is 80,000. I can tick mark that. Work in progress, opening 50,000. Opening WIP 50,000. So my answer will go somewhat fast. Purchase of raw material 2 lakhs plus raw material purchase is 2 lakhs. Carriage inward is 20,000. Carriage inward is 20,000. Direct wages are 1,20,000. Direct wages 1,20,000. Cost of special drawings 30,000. Cost of special drawings 30,000. We are taking it as a forming part of prime cost. Higher charges, we normally add it in factory overhead. Again, it can be taken as a part of prime cost. 24,000. Higher charges of factory. 24,000. Return of raw material. I should deduct it from raw material. It is 40,000. It is not closing, it is return. And carriage or transportation expenditure on return of raw material. Please understand, if you return your raw material, your creditors will be debited, right? But the cost of return is your indirect expenditure. It is other transportation cost. If you purchase your raw material, can transportation cost be added to cost of raw material? Yes. If you purchase a machinery, can cost of transportation added to machinery? Yes. You are purchasing or selling? Purchasing. Is it alright? When you are selling, can transportation cost be reduced from sales? No. It will be treated always separately. When the goods are going out, the transportation expenditure is always indirect. It is never direct. So I will be adding it to factory overhead. Carriage on return is 6,000. or a transportation cost. Expenses for participation in industrial exhibition. Right. This is administrative overhead not related to production. Please understand administrative overhead related to production. Quality checking. You are hiring some person just for quality checking. This is administrative overhead related to production. You are hiring a person for research and development of a product. It is administrative overhead related to production. This can be administrative in selling and distribution, 8,000. Legal charges is administrative overhead, 2,500. It is not related to production. Salary of office staff, again 25,000. Not related to production. Maintenance of office building, again indirect, 2,000. Depreciation on delivery one is 6,000. Indirect expenditure. Depreciation on manufacturing machinery. Help me out. Depreciation on the machinery which is used for manufacturing. It is factory overhead. It is a factory cost, should be distributed in cost of production of all the products. But it is delivery one, you can, it is indirect. Warehousing charges of finished goods, it is administrative in selling and distribution, and warehousing cost of raw material is, it is a factory overhead. Warehousing charges is 1,500. Warehousing of finished goods, 1,000. Closing stock of raw material is 30,000. Closing WIP is 24,000. Stores overhead on material are 10% of material consumed. Stores overhead are storage cost of raw material, other cost is factory overhead plus stores overhead. It is a 10% of material consumed. I should find out material consumed. It is 2,80,000 minus 40,000 is 2,40,000 minus 30,000 is 2,10,000. 10% of material consumed is 21,000. Okay, I have done one mistake. What is the mistake? Carriage inward is the part of cost of raw material consumed, right? Carriage inward should be added to raw material consumed. So I am keeping it as it is, but it is 2,30,000 into 10%. Material consumed is 2,30,000. It is 23,000. Factory overhead are 20% of prime cost plus factory overhead others are 20% of prime cost. Prime cost will be 2,10,000 plus 1,20,000 plus 50,000. It is 3,80,000 and 20% of 3,80,000. 76,000. %10% of the output was rejected and the scrap value is rupees 5,000. So this output is having a scrap value of 5000. As we did it in a previous question, it will be reduced before cost of production minus scrap value of normal loss. It is minus 5000. 10% of finished product was found to be defective and the defective product were rectified at an additional expenditure which is equivalent to 20% of proportionate direct wages. Alright. How many units you are manufacturing? It is given. Yes, it is 8000 units, right? So 8000 units, what is direct wages? 1,20,000 divided by 8000. What is per unit? 15. So to rectify this 720 units, if you want to rectify this 720 units, you will be incurring 15 rupees labor cost, but you need to manufacture or you just need to rectify. And so they say at an additional expenditure which is equivalent to 20% of wages. So I will be multiplying 15 into 20%. What is the answer? 720 into 15 into 20%. It is 2160. What is 15 into 20%? 3 rupees. See, what does this mean? Any unit which is defective will be rectified and will become a normal unit. But it will require some labor to work on it. And he will be working full time or only 20% of time? 20% of time. So only 3 rupees additionally will be incurred to rectify this 720 units. Still your production is 7200 units. After that scrap. This 2160 should be treated as a factory overhead. So there is a place, if you go on internet, you will be finding out n numbers of expenditure which you will see that should be added in factory overhead. N numbers of expenditure, administrative overhead related to production. Whenever you are solving the sum, try to say this 2160. Can it be added to prime cost? Is it directly related in manufacturing the units? No. See, what are direct costs? Raw material, direct wages, direct expenditure. This is once the units are manufactured, some units are defective, you rectify that defective product. This is not a direct expenditure on manufacturing your normal production. So this is treated as indirect expenditure. Is it expenditure related to production? Yes, then it should be, and it is happening in factory, right? So it should be treated as a factory overhead 2160. We have written 2160, yes. Total output is so and so and 8000 units. They have not given anything regarding how many units are sold, right? Yes. So there will be no opening and closing stock. This is 3,80,000. I can total out this. It is 24,000 plus 6,000 plus 23,000 plus 76,000 plus 2160. It is 131,160. 3,80,000 plus 131,160. 5,11,160. Plus 50 minus 24. 537,160. 537,160 minus 5,000. This is 532,160. There is no opening closing, so I am assuming all the units manufactured are sold. So this is 532,160. I am adding selling overheads, which are 8,000 plus 2,500 plus 25,000 plus 2,000 plus 6,000 plus 1,500, 45,000. And my cost of sales will be 532,160 plus 45,000, 577,160. Will be my cost of sales. I don't think selling price or anything is given, and they want up till answer of cost of sales.